morning and hello and welcome to this Money Controls live stream. You're tuned into a fresh new edition of Opening Bell with me, Lovisha Darad. And it is the penultimate day of the trading session, and US President Donald Trump has now announced double tariffs on India. So that's the headline. While 25% tariffs were already going into effect today itself, another 25% tariffs has been levied on India. Now that takes the total levy to a jumbo to 50% now, which is one of the highest tariffs which is compared to any other countries, and it is on par with Brazil itself. Now, this doesn't just make our trade less competitive against other countries, but essentially looks like a trade embargo as of now, because all the labor-intensive sectors, be it textile, shrimp exporters, they've been feeling the heat since the tariffs have been rolled out, and now this essentially puts a big setback in terms of trade function. Now, if you look at the GIFT Nifty trends, it looks like another muted start for us. Pre-open rates have also been indicating a muted start for our markets, despite the global cues that have remained fairly resilient, where we saw that the US markets ended higher overnight and Asia-Pacific markets were largely on a positive note also. We are looking like we are headed for a muted start once again in today's trading session. But we even saw that Donald Trump also announced 100% tariffs on chips and semiconductors if companies don't start building in the US. So so far a slew of companies have already pledged big investments into the US for manufacturing process, and the latest being Apple, who have pledged about $100 billion into the US into the US for investment purposes. Now we will also be discussing what essentially this 50% tariffs means for the trade over the next few days. How should you navigate such volatile times? So keep posting your stock related queries and we'll discuss them in a bit. And now before we delve deeper into the show, let's take a quick check of the top headlines, Sisa. Donald Trump imposes additional 25% tariffs on India for buying Russian oil, taking the total levy to 50%, which is at the highest and at par with only Brazil so far. Tariff order to come into effect in 21 days, that is on August 27. Trump also indicates that secondary sanctions can be announced on other countries, including China. India has criticized US President's move as unfair, unreasonable and unjustified and says it will take all actions necessary to protect the national interests. Apple commits to invest an additional $100 billion in the US, this after Trump plans to impose 100% tariffs on semiconductors and chips, which would exempt Apple because it is committed to building in the US. Donald Trump said that there is a good chance of meeting with Russian and Ukrainian leaders following what he described as very good talks between his envoy and Vladimir Putin. This comes ahead of deadline for Russia to agree for a ceasefire between Ukraine or face new sanctions. And stocks on the Wall Street end higher as investors weighed Trump's call for 100% tariffs on chips. Asian markets open mixed, while the GIFT Nifty trends and the pre-opened rates indicate a muted start for the Indian markets on the back of the fresh tariffs that have been announced. And like I was talking about that, the pre-opened rates are looking like we are headed for another subdued start for today's trading session. US has announced about an additional 25% tariffs on India. So the double tariffs have taken the total levy to about 50% as of now. If you look at yesterday's trading session, Nifty slipped below that 24,600 mark, despite RBI kept the rates steady. And we saw that apart from the PSU Banks, all of the sectoral indices nosedived into the red. Nifty, Pharma and IT, Realty, they were the worst performers yesterday, and the broader end of the markets, they continued their underperformance. But yes, earnings reaction will continue, and the stock-specific action will continue in today's trading session also. We have Titan in key earnings, which will be reporting its Q1 results today. We'll discuss the stock later in the detail. But yes, coming to the fund flows data, FIs, they stood as net sellers in yesterday's trading session, sold stocks which is worth about 4196 crore rupees, and DI is offsetting the impact by buying about 5954 crore rupees in the cash markets. If you look at the put-call ratio, that has fallen to about 0.74 from 0.83 levels in the previous session. So yes, that is all the cues that we had to start with. But on that note, let's quickly get on board with our technical expert of the show to understand and decode what this 50% tariffs mean for us. Joining me is Chandan Taparia of Motilal, Oswal. Chandan, good morning. Double tariffs in India, and already Nifty has been trading with losses in the past 2 days. What can we expect the next moves to be?
Good morning, Lovisha. Thanks for having me. So index has been making lower top, lower bottom formation, and we have noticed that every small bounce is being sold. However, the market was holding 24 535, 24, 515 last 4 days, but today is opening down and even drifting towards the next support of 24, 442. So I believe the structure of negative, the lower top, lower bottom is intact until that is not negated. It would be tough for bulls to get any sort of recovery. So as of now, till Nifty holds below 24,750, the ongoing structure could remain weak to retest the support near 24,350 to 24,200. So I believe the negative structure could continue. However, India VIX is near 12, FI long short ratio is near 8.5%. So a couple of data setup are giving the all sort scenario. But till price doesn't surpass any immediate hurdle, it would be tough for bulls to get any sort of comfort or the stability. So suggesting to be with the immediate trend and remain bearish till the key level is not surpassed. Look for a downside level of 24,200 marks in Nifty index.
All right. Let's also talk about textile stocks. What does it mean for stocks like Arvind, Gokuldas Exports, KPR Mill? How do the charts indicate? You did indicate last time also that the pressure could continue. But on the levels front, how are you viewing all of these counters?
So like most of the stocks are under pressure. In fact, the advanced decline ratio for market is negative and so many counters are making lower top, lower bottom. If I talk about the Arvind or any other name, I think the structure is slightly weak. Let them see some corrective move, then only the stability will be weak. If I talk about the Arvind fashion, 500 is major support. Let the counter come near 500 for any kind of bargain buying. Even the Gokuldas expert and all are likely to see some profit booking at higher levels.
Okay. Right, let's also talk about shrimp stocks, Avanti Feeds and Apex Frozen, because they've also seen significant selling pressure in the past couple of sessions. But anything that you can outline in terms of resistance and support levels for both of these counters?
So Avanti feed has been falling down from last 5 months. It has seen a corrective move from 965 to 640. However, corporate action is clearly visible, but the price is not turning upwards. Even the short-term relief is not visible. Stock is trading below its key moving averages. So till it remains below 665, stock can drip down towards almost 620 to 610 kind of level.
Okay. All right. Since these two are the other main sectors that is facing the tariff heats, we'll also discuss about the jewelry stocks, Rajesh Exports, Titan, Kalyan Jewelers, all of them seeing some bit of sideways movement. But yes, on the levels front, Chandan, what can you specify for us?
So, like, I believe it will depend on majorly on the market side. So, like, if Nifty manages to hold 24,442 kind of level, then only some support based buying could be there in the selective mid cap, small cap. But the only concern is not about the support based buying. The important part is to get the recovery and surpass of key levels. So, I think that will entirely decide the setup of the market and the stock specific action in current scenario.
All right. Let's take the first rates kicking in for us. We have slipped below that 24,550 levels, and we can see a muted start for the markets. 0.3% decline coming in for the Nifty, 72 points decline that is coming in for the Nifty 50 front. But yes, the Sensex has declined about 200 points, 0.2% decline coming in for the Sensex too. So all in all, if you look at the markets, they have been in the downward trajectory itself. If you look at the broader end of markets, mid-caps also showing a decline of about 0.4%. Bank Nifty has opened in the green after some bit of a resilience that we saw yesterday after the RBI has kept the repo rates unchanged today. The Bank Nifty has seen a bit of a pressure with about 0.1% decline or so. India VIX, that continues to ease, however, despite the muted market condition. Nifty Media Index is the only one which I can see in the green with about 0.3% gains. Other than that, we can see Nifty Auto, Bank Nifty Index, all of them shifting into the negative territory itself. Bank Nifty down in with about 0.4% decline. Nifty Auto also not doing well at this point of time. IT, Pharma, Realty, all of them seeing significant selling pressure, and small caps and mid caps also succumbing to this selling pressure in the markets. Let's take a look at some of the top gainers and losers on the Nifty 50. However, the first is you can see Cipla with a gain of about 0.3% gains. Slim gains coming in for the top Nifty gainers. Cipla, JSW Steel, Maruti Suzuki, ICICI Bank, some of the gainers with about 0.1 to 0.3% gains. Hero Motocorp on the back of its Q1 results, good, seeing about a positive momentum, flat start to the markets with about 0.1% gains too. On the other hand, if you look at the way down, Trent with about a percent decline on the back of its Q1 results as well. Kotak Mahindra Bank also not doing well with about a percent decline. Shriram Finance, Tata Steel, Tata Motors are the other losers on the Nifty 50 itself. But yes, Trent, let's talk more about that because that is seeing a cut of about 1%. It is one of the top Nifty losers as well. We did see that the company report its net profit jumping about 24% from a Y-on-Y basis. That was the standalone figure. And revenue also jumped about 20% from a Y-on-Y basis. But so far this year, the stock has been underperformer. Today also the stock is seeing a little bit of a decline with about 1% on the Nifty 50. But yes, Chandan, what can we watch out for the counter going ahead?
Looking at the counter like Trent and all, I believe most of these stocks witnessed profit booking in last 4 weeks, and now support-based buying is visible. In fact, I look at the behavior of last almost 6 weeks. Stock has seen a correction from 62, 49.50 kind of level, and now some sort of stability is clearly visible. So I believe with support of 52.50, Trent can see a recovery towards 5500, 55.50. So I believe already the stock has seen a profit booking decline in last 4 weeks, and now support-based buying could make the stock to move on higher side.
All right. There's a last trade that took place in Kotak Mahindra Bank as well. The stock, that is why we could see that it is down about a percent or so for Kotak Mahindra Bank. And if you look at the 1 month charts for Kotak Mahindra Bank, the stock is still seeing a decline of about 7% itself. But going ahead, how does the stock look like on the charts, Chandan?
So in the last month, the stock has seen a major corrective move from 2250 to 1935. However, it witnessed some recovery, but again, it opened gap down and failed to surpass key hurdle. We have seen some cold writing at higher levels, and 20,025 is an immediate hurdle. Till that level is not surpassed, it would be tough for the stock to move at higher levels. 1935 could act as a key support. So 1935 to 2025 is going to be the broader range with slightly negative bias in the count.
Okay, all right. Let's also talk about Hero MotoCorp because that came out with its results yesterday, and we did see that the net profit stood as flat on a Y-on-Y basis, and revenue declined about 5.5% from a year-on-year perspective. The stock has gained modestly, however, so far this year, 6% uptick, but today also it's seeing a good amount of gains, 1.2% gains coming in. What can we watch out next for the counter, Chandan? Because recently the stock saw a good breakout as well.
So selective auto counters are comparatively holding well. In fact, in last 6 days, Hero Motor has recovered well from 4200 to 4580 kind of level. Today it opened negative but managed to hold the support zone, and higher base is being formed. So that's why I'm expecting positive stance in the counter. With support of 4450, it can head towards 4650, 4700 kind of level. So positive on the selective auto name, including Hero Motor, TVS Motor and all.
Okay, all right. Now let's quickly talk about Bajaj Auto as well, because that also came out with its numbers yesterday, where we saw that the consolidated net profit was up about 14% on a year-on-year basis, and revenue also climbed by about 10% on a Y-on-Y basis. If you look at the brokerages have also largely remained positive on the counter. If you look at Bernstein, they've given out an outperform rating on the counter, as they believe that the Q1 reaffirms its position as a stable business, and the core continues to deliver through its balanced business model as well. So they remain quite positive on the counter, and that's why they've given out a target price of about 11,000 rupees. If you look at, on the other hand, if you look at, CLSA, they've also given out a positive call. They've given out an outperform rating, and they believe that the export volume is recovering, and that's why they forecast about 10% Y-on-Y two-wheeler export volume growth versus guidance of about 15 to 20% for FY26 itself. But the stock has been an underperformer this year. Today the stock is also seeing a cut of about 2% or so. What can we expect the next moves to be, Chandan, for Bajaj Auto?
So here the structure is slightly negative. In fact, today it opened negative and then drifted towards 78.50 also. However, Hero Motor and Bajaj Auto are holding, Hero Motor and TVS Motors are holding well, but Bajaj Auto is slightly underperforming. The stock is trading below its key moving averages and moving in a lower top, lower bottom sequence. So the major hurdle will be at 83.50. If that is surpassed, then only the recovery could be there. Otherwise, upside could be kept. So we have to be in a broader range between 78.50 to 8,250 as of now for Bajaj Auto. But I'll prefer more on Hero Motor and other name rather than picking Bajaj Auto, looking at the relative strength of the counter.
Okay, all right. Let's also take some of the viewer queries, and the first query coming in is also on the auto sector itself. Bharat has been asking the view on Tata Motors. He's asking whether to stay invested or to exit the counter. We did see that, in the last few days, PB Balaji has been promoted to as a CEO of the JLR company to take the cash forward business going ahead. However, the stock has been seeing sideways momentum in the past 1 month itself. 644 today. Also, the stock is down about 1% itself. Chandan, I know we have been discussing about Tata Motors for a while now. What do you say the next near-term momentum to be for the counter?
So it's very tough to trade the Tata Motors, and whenever it tries to give the breakout gets failure and the stock turns lower. Even just 10 days back, it tried to hold beyond 700 but failed to hold, and then the stock has been making lower top, lower bottom. In last 10 to 11 days, it has seen a corrective move from 706 to 642, and the structure is weak. So better to avoid till it remains below 758. It can go down to 620, 600 levels.
620 to 600 levels, that is what the support is indicating for Tata Motors. Let's also take another viewer query at this point of time. Pankaj has been asking the view on SBI. The company is scheduled to report its results tomorrow itself. Of course, we can see that according to Money Control poll estimates, we are estimating that the net profit and the net interest income is expected to grow modestly in just lower single digits itself due to the rate cut pass through itself. But yes, the stock has been an underperformer so far this year. Chandan, SBI, what does the near term look like?
So already stock has seen a failure breakout above 840 marks and then drifted lower to 786 in last 4 weeks. The good part is that 780 is major support, and the base is slightly shifting higher. However, we need to keep in mind that the stock is in a broader range. So 780 to 820 is the immediate trading band. If it witnesses any sort of decline, I think that can be bought with support of 780 for target towards 820 kind of levels.
Okay, 780 support and 820 levels that we can watch out for SBI. Let's take another viewer query then. On that note, we have AP who has been asking the view on Airtel. He's asking whether it could fall going ahead itself. Yesterday, we could see that Airtel saw a little bit of momentum after the Q1 results announcement. However, today the stock is not doing well, flat in the trade, and past 1 month extending the decline to about 5% itself. Airtel, any views on the counter? Because so far this year, the stock has been seeing a structural uptrend.
Yes, so major trend of the counter is positive, and this is the low beta name with resilience at the time of market decline. We have seen multiple support near 1880. However, hurdle is also visible at 2000 kind of level. So I think if it gets stability, then with support of 1880, 2000 kind of target can be seen in the counter. So yes, I think some alpha generation with margin of safety could be seen in Bharti Airtel in this market scenario.
Okay, all right. Let's take another viewer query then. We have Nitin asking the view on Suzlon. The stock hasn't really moved so far this year, but can we expect the near-term momentum to be the same, Chandan?
So looking at Suzlon, I think the stock has been consolidating and finding sustained supply near 67, 68 marks from almost 7 to 8 weeks. However, the good part is the declines towards 60 were bought, but supply is clearly visible near 67, 68. So we have to be in this range. Buy on decline can be seen for immediate target towards 68.
Okay, all right. Let's take another viewer query then on that note. We have Debu K is asking the view on Alchem Labs on what the near-term trajectory looks like. So far this year, the stock has seen a decline of about 12% itself. And in the past 1 month also, the stock hasn't really moved anywhere. But from a near-term perspective, how does the stock look like, Chandan?
So if you talk about the Alchem Lab, in fact, most of the pharma counter were quite volatile in last few weeks due to the comment from the US President Trump. But talking about Alchem, it got stuck in a range. 4700 is the multiple support, 5100 is multiple hurdle. So I think we have to be in this broader range. It has been consolidating from last 4 trading session with support of 4800. So one can keep the support near 4800 for an upside recovery towards 5000, 5050 levels.
Okay, all right. Let's take another viewer query then. Jessica and Bajwa is asking the view on Federal Bank. Of course, we did see that the company reports its Q1 results where there was visible MFI stress also, and that's the result why the stock also fell about nearly 5 to 6% itself. Today, the stock is also not doing well. Past 1 month also, the stock has witnessed a decline of about 8% itself. Chandan, can we expect a further fall going into the upcoming days?
So already we have seen a corrective move from 220 to 185, and now it has been witnessing some support-based buying. However, immediate trend is negative, but some recovery cannot be ruled out after the recent decline. So I believe with support of 192, counter has potential to bounce towards 203, 205.
Okay, all right. Let's take one stock which is buzzing in trade today. That is your PVR Inox after a good with about 4% gains, where we saw that the company report its net loss, which narrowed to about 54 crore rupees in the June quarter, and revenue also rose about 23% on a Y-on-Y basis. However, the stock has also seen some decent gains in the past 1 month, but can we expect the momentum to continue? What do you think, Chandan?
So yes, Lovisha, yesterday I listened to the management of PVR Inox on your sister channel. Mr. Bisley spoke well about the future plan of the company and how the movie like Sayara and all gave them business and focus approach. So yes, I think some support based buying is there. Counter was completely underperforming in last few quarter, but now some support based buying is visible from last few weeks or few months. If you look at the weekly chart, the stock has given a consolidation breakout of 24 weeks. It managed to hold above key hurdle of 1070, 1080. So I believe some price re-rating should be there as per the technical setup. With support of 1060, this stock has potential to rally towards 1110 to 1140 kind of level. So I think some re-rating could be there in the counter as per the technical setup.
Some re-rating could be possible for PVR Inox, so we'll watch out for that counter going into the trading session. Let's take another viewer query then. Debuke is asking the view on 361 VAM. The stock has witnessed a decline of about 15% in the past 1 month. Of course, some block deal was also seen in the counter. But going ahead, what can we expect the next moves to be, Chandan?
So, like, I don't want to comment much about the broking or the selected counter, and disclaimer and disclosure will be there. But yes, I believe the positive setup is there in the entire capital market theme. In fact, I believe selective exchanges are bottoming out after the underperformance of last few weeks. So I think one should look at the same. And the good part is that yesterday the SEBI came out with some report or note that there will be continuation of the weekly expiry, and they said the speculation is there only about the rumor of eliminating the weekly expiry. So I think that is a positive trigger, and I believe the entire capital market theme is likely to do well. And as per the recent data, almost I think 19.5 20 crore demat accounts we have as a total now, and there is a growth of 42 lakhs demat account every month. So all these are the trigger which could continue to keep the capital market theme on the limelight, and I believe there is the potential. And however, due to the market pressure, most of these counters have seen the corrective move. But yes, one can go for buy on decline stance for the next leg of rally in this sector, which can outperform and generate alpha.
Okay, buy on decline recommended for this counter. Let's take another viewer query then. Anune has been asking whether or not Chambal fertilizers can be bought at the current market price. The stock is seeing a decline today in today's trading session also. And from the May top, the stock has seen about 20 plus decline. We did see the Q1 results were quite healthy. Both revenue and the net profit grew about in double digits itself. But yes, from a near-term perspective, and of course from today's market price, do you suggest this as a good buy?
Yeah, so like Chambal has bottomed out recently. It witnessed a decent up move from almost 503 to 570 kind of level. So bottom out approach is there. Stock has surpassed its 50-day exponential moving average after almost 60 days. And the good part is that follow-up buying is required. However, in last 2 days, it got stuck in a range, but supports are intact. So I believe with support of 550, Chambal can see some recovery towards 580, 585 marks.
Okay, 580 marks. Let's take another viewer query. He's been also asking about Dixon Technologies and how the counter looks like. If you look at the past 1 month, the stock has seen a relative gain of about 7 to 8%. Chandan, what can we expect the near-term momentum to be?
So like Dixon really had a volatile ride in last few months. Earlier it witnessed a corrective move and recently a V-shaped recovery. However, now the supply is clearly visible near 17,000 marks, but again buy on decline is intact. So I believe 16,000 to 17,000 could be the broader range. So I think with support of 16,000, use any small dip for an upside target to a 17,000.
Okay, all right. All right, just one last question before we let you go, Chandan. What are your topics at this hour? We're seeing a 50% tariffs on India, but anything that you would suggest as a buying opportunity is in this decline?
So one need to keep in mind that immediate structure of the market is negative, and the good part is even after all the negativity from the global markets and the comment from the US president, market is holding the key support of 24,442. So according to my data setup, I believe 24,442 could act as a key level because in the month of May and the June, the same level respected and market witnessed recovery. But the important part is when the structure is negative and index is making lower top, lower bottom, it needs to negate the same. So two view we need to keep in mind first, major support at 24,442. It needs to surpass 24,750 for any kind of stability. Now looking at the trading ideas, yes, Hero Moto will be the first trade. Already we discussed, but again to repeat with support of 4450, we are looking for an upside target towards 4750 kind of level. In fact, TVS Motor also looks good with support of 2920. It can head towards 3100 kind of level. So one sector where we have positive approach is Nifty Auto or selective auto name. Apart from that, I believe we need to focus on counter like Paytm. The consolidation of 10 to 11 days is now getting over with support of 1045. It can head towards almost 1100 marks. So this is what we need to keep in mind as a selective approach in this market.
Okay. All right. Those are the stocks that we need to watch out for. But thank you, Chandan, for all of this and also answering our viewer queries. And we hope that we connect with you soon. All right, let's take a quick check of the markets before we move on to our next guest of the show. Well, the markets continue to sulk, remain in the sideways territory given the double tariffs that we have got from the US president itself. Sensex down about 140 points now, and Nifty also below that 24,550 odd levels. India VIX has eased to about 2% at this point of time. And if you look at the broader end of the markets, Midcap and Smallcap indices are flat with a negative bias. Nifty Auto Index also continues to trade with a flat with a negative bias. Bank Nifty with about 0.2% declines. Nifty Metal also seeing a decline of about 0.4%. However, the only sectoral indices that are trading with some kind of a positive momentum, that is your Nifty Media Index with about a percent gains itself. But with that, let's quickly move on to our next guest of the show. We have Daljeet Singh Kohli, Head of Equity of Roha Asset Managers, joining us. Daljeet, good morning. Double tariffs on India, but the first 25% goes into effect today. Do you think that this brings India to a more compromising table?
Okay. Good morning. Thanks for having me on your show. You see, this uncertainty about tariff, I think, will continue because it is all dependent on one man's wishes. No, every day in the morning, whatever he thinks, and he will just put in a tweet, and that will just put the word in tipsy turvy. Now, we have to understand that no business makes that kind of margin that it can afford to have 25 or 50% kind of tariffs on it. No? So obviously, there has to be something more to do than just putting these numbers. No? Analyzing this number on one particular sector or one particular company will not yield anything because it's very clear. Nobody makes 25%, 50% margins. So how does one negotiate this? That is important. So to negotiate this, I think we will have to just give it some time. At the level of governments, probably some action will happen. More important at the level of investor, what we have to do is to keep little away from these export-oriented sectors or export-oriented companies. Try to make your portfolio more towards domestic consumption, which we have been doing for last 5-6 months. Incidentally, we had this understanding about the consumption picking up in the country, so we had already built up on that. But this added benefit of global uncertainty is giving even better clarity on that theme. So I think as an investor, what we can do is one that we have to wait for this sanity to play. So we have to just see how these negotiations happen when we get to some reasonable sanity level of these tariff numbers. Second, we have to look at the domestic consumption stories, domestic oriented sectors, themes. And third, within the exports, like I think there are some sectors where even you want to put whatever number of tariff or whatever president wants to do, there is really not much he can do. No, for example, pharma. No, if you do something, pharma to set up a facility, not to set up a facility will take 5 years, but to just change the source of your supplier, that itself will take 12 months to 18 months. No? So you can't do it overnight. So even if it is 25%, 30%, 50%, whatever percent, either the customer has to bear, that means our companies don't get impacted, or the government or the president will have to take it back. That is the only option. So that those sectors actually will give you the opportunity. Because of this, so in our portfolio, just to give you a disclosure, in last 2 days we have added some of the pharma companies because we see that their trajectory for 3 years is very much intact. Because of this uncertainties, the stocks are available 10-20% cheaper. So that is giving us an extra.
Okay, okay. And then Daljeet, let's also talk about, does this bring trade into standstill, and what are the tariffs that you're working with at this point of time? Because we are expecting that, there would be a climb down from the 50% tariffs that he has said in just like 21 days, which would go into effect. But are you expecting that, we can work with, lower tariffs, and what do you think that the quantum would be?
See, it's very difficult to put a one number for all the sectors because it will depend upon the sector. It will depend upon the company's capabilities to negotiate with their customers' requirement, how they are dependent on our supply chain. So that, as I said, in pharma, it is easy. We understand that, especially in generics, probably nobody would be able to change the source. If you have to change the source, you will have to take that much longer time, and it's not available also. For example, certain injectables, when we talk to many of our companies, there are hardly any facilities available in the world. Not alone to talk of India, not even in the world, there are many facilities available. So those guys have to just accept whatever is available. But in case of textiles, it may not be that easy. Or in case of some other things, it may not be that simple. So it will be case by case. What I would say, yes, as you said, the trade may come to a standstill, may not be standstill, but it will definitely reduce substantially. People will go into wait and watch mode. New orders will not come. New buyers, sellers will stop and wait. Everybody would wait for what is going to happen, because nobody will just jump in in the blind well. So it's all going to be wait and watch approach. So definitely some of these companies might get impacted in the short term. But whether this will destroy the demand itself, that we have to see. There may be a deferment, but whether it will take away the demand from these customers because that destruction happens. See, ultimately, one thing is very clear, that this tariff activity is happening across the world. So it's not only India. Somebody will be more, somebody will be less. But if somebody says, okay, if you are a buyer sitting, let's say you are a Walmart sitting in US looking for supply chain across Vietnam, India, other places, then how many options do you have? Everyone will get impacted. So you won't say, okay, India is getting 25, okay, he's getting 30, he's getting 25, he's getting 50. So for 5-10%, how much will you change? How much will it work? I think practically these things will take much longer time to understand.
Okay, okay. Daljeet, everyone was talking about earlier when 25% tariffs were imposed, that India's GDP will take about 0.2% hit. But now that 50% has been imposed, what do you think about the GDP impact for India? And of course, he's also, earlier indicated about certain penalties for buying Russian energy itself. So where do we see the inflation math going up? Because yesterday we did see that the RBI has cut the inflation forecast for FY26 itself.
Yes, that is again a key monitorable. See, of course, impact, as we said, is that trade will get probably deferred, many negotiations will happen. So people will get into wait and watch mode. that will have definitely an impact on the total trade of India. And some estimates suggest it will be maybe around 0.5%, 0.4% kind of GDP impact gets impacted. But then again, I want to caution here that it's not exactly one on one. No, so what happens is, as we said, it may get deferred for a few months. And unless that people are willing to find or they're able to find something else, oh, okay, all the money trade gets shifted over to some other country. So that will happen probably in a very long time if it happens. So we are saying yes, there will be slight impact on the GDP, but again from here to 27, there are 20 days. Lot many things can change in those 20 days. So to take a conclusion on how much quantify the impact on GDP is slightly difficult, but it will be in the range of 0.25 to 0.5% of the GDP that is there. As regards inflation, yes, there is a danger on the imported inflation, no, because of the crude going up. But again, there we've seen that till now crude markets have not behaved irrationally. They have been, despite all this, so much of turmoil happening, last so many months. Crude has stayed in that range of 65, 70, 75. Sometimes it goes to. So we have seen in India, we have seen rates up to 100 also. No? So we are okay to handle such kind of situations if things arise. But yes, if that is a pressure point for India, definitely to be monitored over next 2-3 months.
Okay, okay. Daljeet, let's talk about sector to sector, because how are you positioned against the textile or even the shrimp sector for that matter? Because currently for the textile, we are working with about 50% tariffs. Of course, the details are not out yet, but if you look at the competitor Vietnam, that is working with about 19% tariffs. So, do you believe that we are at a trade disadvantage, or how are you positioned there at least?
Yes, with this 50%, if we go ahead, then it is definitely a big disadvantage to the sector. And unfortunately, the sector does not have that capability to maneuver too much in this, no, because their costs are more or less fixed and very little to scope. They're always fighting. In fact, many, for a very large time, they've been dependent on subsidies and government incentives, etc., etc. So it's a very, very competitive market. Definitely this kind of disadvantage of so many percentage points does not work in their favor. They will get impacted negatively. We have, as a disclosure in our portfolio, we don't have any textile stock purely because of this uncertainty. So we were always keeping away. And this uncertainty, again, it's important to understand this uncertainty has not started today. It has started from January 20, when all these things started. So if you were a long-term investor, you would have definitely positioned yourself. That's why I think markets are also behaving very maturely. Markets are also not showing that those big swings on everyday announcement, because it's almost 6-7 months. Everybody has understood that something or the other will keep coming. So you are positioned according to yourself. Of course, trading, a few demand supply actions will happen over every day. But most of the investors, I think, are very well aware what is happening and what kind of uncertainty is there. So portfolios are mostly aligned to that.
Okay, okay. Though, what would you suggest for the traders for the next 21 days? How they should navigate this volatility? Should they stay invested? Should they remain on hold until the entire tariff scenario is completely out of the table? Or what is your suggestion?
See, traders, they know on the basis of stop loss how they work. No, so there's nothing more they can do, and they have to play. They have to be very, very nimble-footed. I can only say that volatility is going to be uh, maximum in this period. So every day, without every kind of news flow, things will happen. But as investors, we don't have to act on each of these news. We have to stay calm. And in fact, we have to look for opportunities, because ultimately, see, what we are believing and this portfolio and to our investor communication, we are saying that out of all this turmoil over a period of 3 months, 6 months, 1 year, we will be much better. So one, you have to be very stock specific. There will be mispriced opportunities in this turmoil. And normally, if you see, history tells us, like I've been looking at this for last 3 decades. Whenever these kind of turmoils happen, uh, there are very good opportunities which come out of this in the sectors which many people tend to ignore, or which get a lot of noise. So, like as if not, at this point of time, everybody is talking about exports to be ignored. Don't look at exports. That is the place where you will get some mispriced opportunities, some very good companies available at throwaway prices because of the negative news flow. But you have to again be very, very cautious that is this only going to be temporary, and will these companies get out of this turmoil? Just to give you an example, we had an agrochemical company in our portfolio, and last 4 months, 5 months ago, when this turmoil started, that stock went half. We discussed, we did a lot of understanding on that company, worked on threadbare analysis, spoke to the management, etc., and finally took a call that we stay put. Today, that stock is more than double of that. So that is where this conviction will play. So in this turmoil, there will be some opportunities which will come out, which may appear at that point of time very difficult or a very bold call, but over a period of 1 year, 2 years, you will find that that was the best time to buy. So you have to be open to those ideas also as an investor. No? As a trader, of course, you have a different strategy. As an investor, you have to be open to those things. Maybe in pharma, in chemicals, agrochemicals, you will get such kind of opportunities.
Daljeet, you mentioned about agrochemical stock that you are talking about, but any other themes where you are finding there is certain growth visibility, because so far the earnings season has also been fairly muted, but anywhere where you believe that the valuations look appealing and there is a certain sense of a growth visibility?
Yes, one segment which comes out very clearly is consumption related, domestic consumption, especially if it is more tilted towards rural area. So small ticket appliances, or day-to-day consumption items, but not staples we are talking. So those kind of segments we are looking that they might be in for a good time. If you see from the commentary of some of these companies which have come out with the results in the last 15 days, many of them have started talking positively. So and quarter on quarter, if you see the commentary, the confidence level is far, far higher. So one of the companies that we hold in our portfolio, it's into small appliances, etc., household appliances. The confidence level in last 3 quarter con calls to yesterday was much, much higher than other ones. Second, the commentary about growth picking up, about the numbers were expected to be much better in quarter 2 and quarter 3, because normally these consumption stories, quarter 2 and 3 are better quarters after the monsoons, etc. So, and first festivities come in. So I think that segment will play out well. Some of the good small cap, mid cap stocks are available at a reasonable valuation.
Okay. Domestic themes, that is where we are focused at this point of time. But with that, we have to let you go, Daljeet. Thank you so much for your time and joining us.
Thank you.
All right, let's take a quick check of the markets, because we were in the downward trajectory after the double tariffs that the Trump has imposed, and the sell-off has extended a little bit. You can see that the Sensex is down about 250 points. Nifty is also below that 550 levels. So yes, 24,500, that is where we are testing at, and hopefully it sustains throughout the day, that 24,500 mark. If you look at some of the sectoral indices, Nifty Media is the only sector which is shining in the green. Apart from that, Nifty IT has also trimmed some of its losses from earlier in the session, and it is trading with flat but with a positive bias. Nifty FMCG also seems to be doing well with about 0.2% gains, and Nifty Consumer Durables on the other hand is also seeing a slim gains at this point of time. However, majority of the sectors, be it Realty, Bank, Auto or the metal indices, all of them seeing a decline of about 0.2 to 0.3% itself. Midcap and smallcap indices, however, largely remain at suppressed levels itself. But yes, the headline indices are, bleaking in the dull territory. So we'll watch out if there is any recovery in the second half, or if there is any extension of this sell-off in the second half of the trading session itself. But with that, we have come to an end of this edition of Opening Bell. Don't forget to tune in at 3:30 for closing, and we'll be discussing about how this market is developed and what the stocks have been in focus. Until then, signing off.